Okay, I think we're live.
Okay, guys, I'm going to start. Hey, everybody, welcome to the Cannabis Loans and Investments webinar. Really happy to be here. We had a scramble getting on with tech issues, so sorry if any of us seems a little frazzled, mostly me, but I'm here. Type in the chat if you can't see or hear us. We're really happy to be here today. My name is Vince Slowoski. I'm a business lawyer, cannabis business lawyer here in Portland, Oregon, mostly a transactional lawyer, but I have a litigation background, as does Griffin Thorne, the guy with the checkered shirt sitting there. He's in our Los Angeles office. He's a talented transactional worker. I work with him a lot. And then Aaron Pelly, the guy who's been at this probably longer than any of us. And Aaron, you're up in Seattle, Washington. And Aaron's is a dyed-in-the-wool litigator, but he sees a lot of business loans and investments, and is going to be here to talk to us today about that too. So sort of without further ado, I'd like to start, but I first want to say thanks to everybody who typed in questions. We're going to answer some of those questions as we go, and to tell you that we're soliciting questions even as we go. So if anything comes up and you think of something and you want to type it in, we'll do our best to answer. And we'll probably be able to get to most of them. So let's just see how it goes. I'm going to start with a question for Griffin, which is going to inform a lot of what we talk about today. And it's the fact that marijuana may move to Schedule 3 this year at the federal level. And that's obviously going to have effects on all kinds of things. One of them is cannabis loans and investments. Griffin, big picture, what do you think some potential effects are for cannabis loans and investments, assuming it goes to Schedule 3?
So I think you got to take a step back and look a couple of years ago and how the field was back in, for example, in California, where I work and practice. Early on in the recreational licensing era, we saw a lot of folks who wanted to invest in a cannabis business. And I'll go even a step further back, which is to talk about the difference between an investment and a loan at a high level, where, an investment, in both situations, somebody's giving money to a cannabis business, right? The expectation and what they get back is the main difference, right? So in a loan, you give money to a cannabis business, you get paid back plus interest over time. Whereas in an investment situation, you give money to a cannabis business, you get some stock in the business, and you become an owner of that business, right? So if we go back to 2018 and a couple of years after that, even, we saw a lot of people wanting to buy into a cannabis business, want to drop some money in, get a small ownership stake. But as the industry started to really suffer, especially in California, people stopped wanting to do that. And what you saw happen was more debt finance and more convertible debt, whereas people they just didn't want to have an ownership stake in a lot of these businesses that were failing and couldn't go into bankruptcy court.
Could you explain just real quick what convertible debt is? Because I'm guessing some people might not know that term.
Yeah, so convertible debt is where you start off loaning money to a cannabis company, and if something happens, and you specify this in the contract, you can convert that debt into equity or stock in the business. So you loan them $1 million, there's a predetermined formula usually, and if something occurs, sometimes purely the lender's election, they can convert that debt into equity in the cannabis business. So it's more, I would say, safe than just a straight equity investment where you're buying stock. If the business fails, you're out of luck. You're not getting that money back. But in a convertible situation, if things aren't going well, you could elect to stay a debtor or not convert, depending on the type of contract. So you started to see an increase in that. I would say that's been fairly common over the last couple of years. So what does that have to do with rescheduling? We've written about that a lot on the blog. Anyone in the space is probably familiar with what's about to happen, potentially, reportedly. The biggest change that rescheduling is going to have is that it's going to eliminate 280E going forward if it gets put onto Schedule 3. And what that means is one of the biggest impediments to financial success in the industry is going to go away on a go-forward basis. Some people argue it might be retroactive. I don't think that's persuasive. But basically, without 280E and all the problems that causes, I think a lot of these cannabis business people might be more willing to invest in businesses that have fewer financial roadblocks in front of them, right? So 280E tends to be the biggest one. State taxes, illegal market, all that stuff tends to be second, if not just as bad as 280E. Obviously, that stuff is not going to be affected by rescheduling, but the 280E roadblock will get lifted if that happens. And this isn't just anecdotal. I mean, when that first came to light that this was going to happen, you saw a lot of flurry of purchasing the public cannabis companies stock, right? So their value went up, which means people wanted to buy into those companies. Um, buying public stock obviously is different from private equity deals. And so I still expect that to happen. I mean, even since then, we've seen an uptick in interest in that, not in the public context.
Good answer, Aaron. Anything to add? And do you think it's a sort of a different analysis in a situation where the state doesn't allow non-resident ownership or anything like that, or is it just kind of the same across the board if cannabis goes to Schedule 3?
I think for Schedule 3, that's the biggest benefit. I think people have touted other benefits. I think there's a lot more downsides to it than that single upside. But that single upside in terms of the success for businesses, for sure. I mean, if nothing else, I in Oregon and Washington and California, I've talked to clients where the tax burden alone is just the difference between successful and not successful. And when you're looking at investment, people wanting to invest in companies, we now are at this place in the industry where people can't just promise blue sky and say, hey, this could be anything, or here's my numbers, and they're all just pulled out. They have the numbers, and a lot of times the numbers aren't good, and the reason they're not good is because of 280E. Some people are being taxed at a rate of 70 to 80%. That's just like, there's no businesses that can survive. You must truly, truly love being in the industry if you're willing to be taxed at 80% and then still be able to run and make it in a company. You're a rock star.
Yeah, so suddenly overnight, I'm sort of fond of saying a lot of these businesses' margins should just increase dramatically, right? And they should look like much sexier candidates for lenders, right? And the businesses themselves should be able to bargain for better rates and better terms on all these loans, right? They'll just have more leverage because they're a more attractive financing candidate. Would you agree with that more generally?
Oh yeah, for sure.
All right, so if we don't get total cannabis descheduling, which a lot of us would like, at least the Schedule 3 thing should really help with respect to like basic business viability and their abilities to borrow. We got some related questions on this. We got a couple of questions around just one is very specific. It says, can a cannabis state issued license be collateralized for a loan? Other people have just asked about business model issues, I guess I'd say, around borrowing and lending with cannabis businesses. I wanted to address that quick, and I'm going to ask you guys for thoughts on this probably too. In my view, there are two really big sort of threshold issues there. One is regulatory questions, right? And the big question there to start is often, does the lender have to be vetted and disclosed to make the loan, right? And that's a very state-specific question. All of these cannabis programs are different. Some are similar, but each one's a snowflake ultimately. And this sort of question about like, if the lender can just make a loan and not have to deal with regulators at all, and nobody has to worry about that, is something you should probably run by an attorney or run by your regulators or whatever, because often lenders do have to be vetted and disclosed. And the question is, what level of vetting and disclosure may be required? Are they going to have to go through the whole rigmarole of like fingerprints and background checks and things like that? Or is it just a notice thing with the state where they just have to say, hey, I lent this business a large amount of money, et cetera? And when you get into issues of like convertible debt, like Griffin talked about earlier, where there's a trigger where suddenly the lender may become an owner of a business, they're even more likely to have to be disclosed at that point. And it's a question of, do you have to do it before the trigger, before the equity issues? Can you do it almost like after the fact? It's really important that you get that stuff in your documents so everybody's ready for it, and so there's no, license issues. The second issue that I often...
Vince, can I jump in on that?
Yeah.
One other pointed issue that comes up quite a bit in structuring loans is, and this is sort of related to what you were just mentioning with convertible debt, but one of the things lenders like to ask for is a pledge when they're giving a loan. And a pledge basically says you're loaning money to company A, and company A's owners say to the lender, if company A doesn't pay you back on time, if it defaults, we'll give you our stock in the company, right? We're collateralizing our stock.
Sure.
If the company defaults, then the lender could then take the stock and would be actually an owner of the cannabis business. And so in that case, without a doubt, you're going to need to go through some disclosures. I mean, probably depending on the state, there's some sort of notice requirement at the very least, but that would change when the pledge, when the lender takes control of the equity in a pledge situation. And as you can imagine, when that happens, it's usually probably not the friendliest situation. Like there's a dispute, the borrower's defaulted, they're not going to want to comply with regulatory requirements, or at least help the lender in complying. If you're in a state like California, the regulators won't even really talk to anybody except the licensee, and so things can get pretty hairy. And all this is stuff that it's very state specific. Where I work, cities here add their own layer of complexity often. So you need to really be keyed into this, and there's not a one size fits all approach with state by state lending right now.
Yeah, I agree. And that kind of segs into the second issue I was going to talk about. Griffin actually mentioned it, which is security and the license. And someone asked that related question. I mentioned, can a state issued license be collateralized for a loan? The answer is yes, sometimes, right? So like here in Oregon where I sit, it can. And it's kind of a curious thing, right? Because you think of a license, what's a license? Well, usually it's just like a permission given to you by the state, and it's personal to the licensee, right? Think about a hunting license or a fishing license or a driver's license. That's something that they give somebody. The person can't then turn around and say, hey, I'm going to let this other person use my driver's license or a hunting license or fishing license, or I'm going to pledge it as collateral for something they're giving me. Cannabis licenses can be a little different. In Oregon, for instance, the state will let you do that. They treat the license almost like an asset and not a license per se, right? But every state is different, and it's really important to sort of check that out and understand that it's fluid, right? Some data will go to court in Oregon, and the judge is going to look at it and say, what are you guys talking about? You can't have a security interest in the license. I don't care what the OLCC has been doing, right? So that's a very important question for lenders and borrowers. And then the other question is, what else can you collateralize? Well, can you collateralize the cannabis itself, the cannabis inventory? In many states, the answer is yes. You can collateralize the controlled substance, and you can file UCCs and other things. But, do you as a lender really want to go in there and take possession of the controlled substance? And what's the protocol for doing that if it's allowed with the regulators? And that's kind of a step further, right, than just lending money to a cannabis business. Now, all of a sudden, you are a trafficker in the classic sense. Do you want to sign up for that? Do you actually want that kind of security? Or do you just want security and maybe some equipment, something like that? So these are really big considerations, I guess I'd say, for both borrowers and lenders in cannabis businesses. Did I miss anything, guys? Anything else to add as far as security or regulatory questions?
Go ahead.
I was
going to say what I've seen mostly for collateralization, although some as far as lenders go, they will sometimes often try and get in there with the license. A lot of times they want the property, or they want some of your personal assets or your personal pledges, and that's where it can get a lot. I've seen a lot of clients. Unfortunately, because the cannabis industry is so volatile, it's something I try and keep my clients from doing, is doing those personal pledges or putting up their own homes or assets to essentially get those loans for those cannabis companies. But sometimes there was no choice. When you go back to 2015 to 2018, Washington State did not allow anybody but Washington residents to invest in or own a license. So there was a very closed system with very few opportunities for people to borrow from. And so, some people just did what they had to do in order to move forward.
I guess I'd add to that if you're a lender in the space, you need to think real hard about whether you want to actually be involved in the business if there's a default. So things like pledges, what does that mean if you have to take the stock of the company? Suddenly you own a cannabis company and all the issues that come along with it. What does it mean to take a collateral interest in the goods? Can you even legally sell them? Look, irrespective of the fact that you could maybe take a security interest in them, if push comes to shove, like, what are you going to do with 80,000 pounds of biomass, right? It's not going to be something that the average lender is equipped to deal with. And so they start looking for other forms of collateral. And as Aaron noted, the best thing to collateralize often is real estate. But in my experience, most cannabis businesses don't own their own real estate. They lease it, right? And so there's all kinds of other things you start to see, or you just start to, lenders just they won't loan money to cannabis companies that don't have anything to offer, right? And so at some point, a lot of these businesses are sort of stuck without the ability to get financing.
Yeah, and I'd add on the borrower side, you should be organized. Like if a lender, essentially what you're doing is you're asking the lender to be a bank for you, right? And if you were to go to a bank and apply for a loan, they'd ask for all kinds of stuff. They'd ask for all your company documents, your operating agreement, shareholder agreement, whatever you got. But they'd also want a pretty like accurate picture into your financials, right? So they'd want P&Ls and things like that from your business and a balance sheet. And yeah, a bank would require a personal guarantee often on a small business loan. So you kind of gotta, I would say that if you want to work with a lender and the lender is sophisticated, they're going to ask you for all this stuff. So kind of be organized and be prepared for that. We run into issues a lot of the time where, a client will come to us and say, should I lend money to this business? And we say, yeah, probably, but get some financials first, right? They're asking you to be a bank. So that's just sort of a tip that I would give people. Half the time people don't care. And half the time people are just like, okay, promissory note, $150,000. I assume it's collectible because it's a business that's running, but that might not be enough for some lenders, and some borrowers should be prepared to sort of organize themselves financially and present themselves in that way.
And that's actually one of those things that like you can either do through the firm or yourself with a lawyer or by yourself. But like a due diligence checklist is not that hard to come up with and present to somebody. If you're going to be doing the investment, that you go and get that due diligence checklist and give it to them to give back to you, so that you have all those financials, all that information and data to kind of decide if this is a good investment or not.
Absolutely.
I want to jump on that too. And I do a lot of due diligence on just in general on different kinds of transactions. And in my time here, I've done quite a bit on borrowing and investment transactions. And I cannot tell you some of the crazy stuff. I mean, I just, attorney-client privilege. I can't tell you some of the crazy stuff I've seen happen over the last few years. It is imperative if you're giving money to someone, whether it's through an investment or a loan, that you actually understand who you're giving money to. Like the example I like to give is if you're going to go buy a car off Craigslist, you're going to go look under the hood and take it for a test drive. But for some reason in this industry, there's a lot of people, like less so in 2024, but certainly when the markets just open up, who would just throw money at these companies because like you can't fail, right? This industry is gonna take off, and it hasn't, right? It's like failing pretty much across the board, right, in a lot of these states. And so especially today, but I mean, so many times where we start to look at things like licenses, and the business might have let a license lapse that it needs to operate. So that means it's not operating legally, or, it's gonna, we'll find out in the middle of a purchase or an investment or something that there's active litigation, including like litigation about, this is some of my favorite, like litigation about ownership when you're buying a business, right? So people are saying, I'm the true owner, and you're trying to buy the business from someone else. Like, you're going to get sued, right? So it's really key to do this diligence. I mean, from the borrower's perspective or the company who's receiving the investment, like, probably less so because you're just getting money from somebody. But certainly for lenders and investors, it's absolutely 100% mission critical.
Yeah, we've done due diligence where we found out that like there wasn't even a lawful license. There are California cases,
right,
oftentimes where they're being presented as, I think that the newest term that it's under is legacy license, and which and it's like you're not operating legally at all. And then again, I think I have one client who we had to get the money back for, and I'm not sure any amount of due diligence could have fixed this, but the person sold the license to 3 different people. Tried to sell it to 3 different. He actually sold it to 2 of them though, and took the money and ran. Yeah, it's a crazy world out there, and you're dealing with a lot of people that are, they're risk takers and they're outlaws. So you have to be really smart about what you're getting in bed with.
Yeah. And borrowers could do a little diligence on lenders too. People don't think about it that way, but that's true, especially in this situation where you're heavily regulated and the lender may one day have to be disclosed to somebody, right? You want to make sure that they're able to even be on a license in the first place and all that. So there are a lot of considerations with that stuff. A good lawyer can walk you through it.
And I just to throw onto that too, I mean, I don't disagree with you, Vince. From a borrower's perspective, the one pitch I usually make to people who are receiving the diligence requests, so the borrowers or the sellers or the companies soliciting the investment, is that if you're going to work with a lawyer at any point in the process, this is probably the best place to do it, because it's so easy to drop the ball on making disclosures in the due diligence process, not disclose something material, and then suddenly later get sued for fraud or concealment which obviously can lead to punitive damages or whatever it may be. And just even if it's not intentional, just botch something and suddenly find yourself being sued for a multi-million-dollar judgment, even as an individual in some cases. So that's why I tell people that the diligence is usually one of the most challenging parts of any transaction.
Yeah. So we've talked a little bit about like the cannabis industry was riding high from 2015 to 2018, and now things are hard. And we've talked a little bit about like ways that these things can go wrong with respect to fraud and damages and anything else. Aaron, as probably the most senior person here and the person that's litigated the most, what do you think some key considerations are for a borrower cannabis business to avoid disputes down the line when they're thinking about taking money from any third party?
Boy, if I could see the future, I suppose it would be different than it had crystal ball back when some people were, especially what happened after the, essentially we went through the recession and cannabis kind of kept going strong. And then in Washington State and I think even in a lot of other states with COVID, it even got stronger. And it was like, you can almost correlate to the day that kind of when COVID ended and the doors opened up on the West Coast, that the cannabis industry kind of went down 60%. And so I don't think people predicted that. They built their businesses up and were borrowing money and building themselves up and scaling out based on that belief that we were COVID proof and we were recession proof. But I don't know that anything could be more important than what we already talked about, which is making sure that you're not taking more than you should or could and stay alive in this industry. And I see a lot of people that are coming in kind of newer that just don't realize that this, with the taxes and with the kind of the ups and downs of the market itself, is just not knowing truly what they're getting into. And again, that also still kind of falls back on what we were talking about before, which is we now have proof of concept of how these businesses are going to do. And so if you're going to borrow now at this point against a system that's already not working, then don't put up your personal home. Don't put up, and make sure you get contracts. One of the biggest things that we end up litigating in terms of borrowers and lenders ends up being, I'm still stunned at how many, I literally did have a case where somebody made a deal on a napkin, a cocktail napkin. I have a lot of handshake deals. I have a lot of money that's transferring from one person to another in a paper bag, $800,000. That's a public record, by the way, not privilege. But it's, a lot of things are out there that are being done that aren't papered up, you're not getting contracts. Even something as simple as sometimes not clarifying from the lender, when they join a company and they get 75% of the company or 25% of the company and they pay $100,000, is that a capital contribution or is that a loan? And having that kind of clarity oftentimes is even overlooked by lawyers and contracts. So it's just really being able to make sure that you have some clear expectations about what your money is, what it's for, whether you're getting anybody back, all those things, having that all in a contract. I can't tell you, and it's the cannabis industry, right? This whole industry was built on trusts and handshakes before, legalization. So you have a lot of outlaws that's how they've always done business. And unfortunately, we're trying to retrain them or reform them to have paper that supports their position for what they shook hands on.
Yeah, and I think it's interesting you talked about like sometimes it's not even clear, is this a loan or is an equity investment? Sometimes when people are making an equity investment, I say like you very certainly have to do diligence on the company's operating agreement, shareholder agreement, whatever, to figure out how you get that money back out, right? Because if you're investing a couple $100,000 in the cannabis company and thinking, okay, I'll start getting this money back out sooner or later, maybe not. Maybe the operating agreement says that distributions can made at the whenever the manager decides, and there's really no guardrails on that, and you're not the manager. You may even have got 60% of the company, whatever. You have to figure out, like, when I put $1 in, how does the dollar come back out? That's true on the debt side. That's true on the equity side. So it's really, really important. And I always tell people, this is conservative, but not too conservative. I say, don't lend to a company that doesn't even have governance documents. How do you even know what's going to happen? How do you know how that dollar comes back out? You don't.
Right.
Yeah, it's sort of basic stuff, but it's constantly overlooked.
The dollar, if you're investing money in a cannabis business, though, Vince, you should just assume the dollar is not coming back out. And I know that's sort of an extreme thing to say, but you have to think about it like this. Companies can't distribute money to their owners, which if you're doing an investment, you would be an owner, unless they have available cash, right? Which is usually defined to mean excess cash. So your revenue, you have profits that you could distribute cash from. In most of these businesses, because as Aaron and we all talked about already at the top, the taxes are so problematic and other factors are so expensive to do business here. Like the profits can be razor thin, if any. And a lot of these businesses are operating at a loss, or even the ones that are profitable are also trying to reinvest it and maybe buy
Right.
a new location or something. So very, very, very rarely do these businesses send a lot of the cash upstream, in my experience, right?
But I think you're right, but I also think you got to be ready for that, right? If the business has like excess cash and it's deciding I'm going to pump every excess dollar I have back into building the business, you're sitting there as an owner of the company with quarterly tax liability a lot of the time. Like you literally have to write a check to the IRS 4 times a year for income that's been allocated to you, even if it hasn't been distributed. So I guess what I'm saying is know what you're getting into, right? Like Griffin's right. Like a lot of these companies are lean and they don't have a lot of excess cash to distribute to owners. But if you're going to sit there with some big tax obligation that you're not even able to get $1 out of the company to cover, that's a problem, or it's a problem for a lot of people, I guess I should say. Okay. Next question. And we talked a little bit about this, but like, what are the forms of loan or investment that can be made into a cannabis business? Is it just debt and equity and convertible debt, or is there other solutions or other like protocols and pathways? Griffin, do you have any thoughts on that?
Well, I mean, there's a million ways you can do it within that framework. So if you're just looking at loans, for example, you might see just a term loan. You might see a construction loan. You might see like a line of credit, which would mean you can basically draw down money over time. Sometimes it's revolving, meaning you can just keep doing it as long as you paid back. Sometimes it's not. And there's just a million ways to do it, right? And it always depends on the circumstance, what you're using the funds for, et cetera. On the investment side, I mean, it can be sort of similar too, right? You can have a convertible investment. You can have just a straight, I'm going to purchase this much stock now. You might have investments with certain milestones or vesting schedules built in. So there's a lot of ways to do it. And I mean, then you start to see other things too, like financing of receivables and other sorts of less standard arrangements, although they're fairly standard in other industries too. But a lot of times regulations make it more challenging here or make companies less. I mean, people just aren't paying their bills in California, at least. So receivable financing is kind of like, it's a hard sell for a lot of folks. But yeah, I mean, there's just the gamut of anything you can imagine, basically.
That came up in a meeting in Oregon. There's at a trade group meeting in regards to the fact that I think Oregon and Washington both allow for essentially people to front the cannabis to other folks. And in Washington, it's absolutely not allowed whatsoever. I think it still happens. They just find clever workarounds. But at the end of the day, that's which can be a really big deal when you're dealing with receiverships, right? Where because people do have a pseudo bankruptcy system that they can go into, which is at a state level receivership. And I don't know a lot about it in California and Oregon, but I know in Washington, it ends up working almost functionally like a bankruptcy. A judge steps in, they put somebody else in charge, that person takes the keys and basically says, if you can't pay these debts that you're being accused of owing, we're going to sell everything, including the license. And then they pay off the debtors according to agreements.
Right, which is another sort of reason to think hard as a lender about what kind of security are you going to get here. I mean, let's say everything goes wrong and this big company ends up in a receivership. Do I have any sort of preference, or could I get any sort of preference as a secured creditor? Those are all things to sort of think about on the front end. That's an interesting distinction that Aaron just made about certain states not allowing businesses to do things as we say on terms in Oregon. I don't know. That's like a lot of the time you'll have a farm here that just gives all their inventory over to some wholesaler and says, pay me when you get paid, right? Like some states allow that, some states don't. There's a lot to think about there for a borrower or a lender, especially in those states. And you should really understand how the businesses get paid and how the industry works in a state where you're lending money, I guess I would say, because it's important structurally. Do you have anything to add there, Griffin?
No, I mean it's a huge problem here. We don't have any rule like that. People are often paid like net 30, and then the retailers just they have a huge amount of power, and they just don't pay. And there's a lot of huge problems that are caused by it. Can't go into bankruptcy. The state has proposed some legislators in the state are proposing a law again this year that would like mandate essentially telling on people who don't pay on time, force licensees to tell on each other, and then would strip them of their ability to buy on credit with like limited hearing rights. It's a pretty bad idea, I think. I mean, it's well intentioned, of course, but in practice, it would lead to some huge problems. And so I think there's probably more elegant ways the state could deal with it, but they just, no one's taken my advice apparently. I do think though that
I would.
if you're obviously if you're a supplier and you could get COD terms, like it's the best possible thing. You avoid this issue, but yeah, I mean, so turning it back to finance, when we talk about receivables financing, where a lender will come in and lend money against future receivables, or even buy the receivables and then have to go collect on them themselves in some cases. And so, in an industry where it's this volatile, it could be hard to do. I mean, I've seen plenty of it, but it's a bigger risk for a lender when people just aren't paying their bills, right? And we've seen plenty of that in the last year. I mean, you don't need to trust me on that. There's plenty written about it. So I think at the end of the day, it's something that if a lender will do it, you're going to see much higher interest rates. And it'll often be characterized as not even a loan. We'll say this is a receivable purchase. It's not a loan. So the usury laws therefore don't apply. And we're going to charge like 35% interest per annum effectively, right? Whereas normally the cap in the state is 10%. I know Washington and Oregon are much different, but um, the less security or the more risk an investor takes, the higher the interest is going to be. And if you're paying 30% interest effectively, and think about what that means in reality, it's quite a bit of money. And so it's like there's not the best solutions right now. And so that's one of the things that borrowers need to be cognizant of.
Somebody is asking a very specific question, which kind of dovetails on what you just talked about, Griffin. They must own a California dispensary because they're asking what is the best structure for a California-based dispensary to structure investment and accept financing into their company. Do you have an opinion on that?
Investments specifically, I mean, it's really up to the business. I mean, when you think about an investment versus debt, right? In a debt situation, you're taking money from somebody else. You have to give it back to them over time. And so what that lender is going to want to do is take security, as they call it, right? So they want liens on your assets. They want all this stuff, and effectively collaring the business for X year period of time. You are under the thumb of the lender. Now, and in the equity situation, you're selling you're selling part of your business in exchange for money, right? That's how you raise capital. And so the problem with the equity side is the the investor isn't going to have the same control as a lender would, but they'll own X percent of your business, and then you're going to have to deal with that person as a 5% or 20% or 50% owner. And is that something you want to do? And so I think that part of the issue is you have to look at how much money you're trying to raise, and then the value of the business. And so if you need $1 million and your business is valued at $10 million, like, so what's the amount of equity you're selling? And a lot of times people, once businesses start to grow, they start to create different classes of equity. So you might have type A, like type A and B stock, where A is the normal stock that has the normal voting rights, B is non-voting, and you're selling that. So the investor has the right to participate in the profits of the company, but not in management, right? And so there's other things too. There can be liquidation preferences, things of that nature, where people have different rights to distributions in the event that the company is sold or winds down or whatnot. So, I mean, there's just a lot of ways to look at it. But if you're selling equity in the business, essentially, like, those are the biggest things I think in my mind is what level of control does this investor get, and what kind of equity. I would also just say, to add on to that, a savvy investor is going to probably not only look at your governance documents, but want to add things to them. Because if I'm giving $1 million for a 15% stake in a business, I don't want decisions to be made on a majority basis, right? I want the investor, I want to know that they have to take my vote on things before they can go and buy a Lamborghini for the business, right? As a company car. So they're going to insist on minority owner protections. And that's going to be a lot of back and forth on the negotiation side. So if you're not open to that, it's going to make an investment much more challenging. And at the end of the day, if you don't negotiate hard enough with your investors, you might end up where it's 85-15, but the 15% can basically veto any decision, which is also not completely tenable in most businesses.
Okay, and then I have another state-specific question. Aaron should field this because it's Washington. It says Washington is still closed to ownership by non-residents. What do you see as pros and cons of this type of situation? It's kind of a broad question.
You're muted.
Yeah.
Sorry about that. The pros are policy, really, and because we were one of the first ones, a lot of states just kind of followed what we did. But the idea is to get as many people that are not in the market that are selling illegally to come and join the legal market, and with as few competitors as possible from out of state, so that we really bring the market upwards into this recreational market and selling there. So from a policy level, I understand it, at least to start with. Obviously, the downside to it as it goes forward is being able to do some of the things that Griffin was just talking about, which is to bring in other investors from other states that want to come into this. The Washington State Liquor and Cannabis Board doesn't allow that because they want everybody, whether they're an investor or an owner, to be a resident. It's strange too, because I never really thought I'd be talking about the Dormant Commerce Clause after law school, and that's kind of what is on point for this. This isn't really constitutional, and almost every state but Washington's high courts have, once they've heard this argument of whether we can prevent other people from other states from joining in the industry, they've shot this down and said, no, you can't do that. That's unconstitutional. And Washington basically, even recently, and I want to say in the last month or two, came back again and said, well, we're not going to be able to apply this because the Congress hasn't exercised their authority to engage in commerce and interstate commerce. And so the Dormant Commerce Clause doesn't apply. So I'm still hopeful that it'll change in Washington, because I think it does make it a lot harder for the industry to flourish when you restrict the residency like this, and it's just no longer necessary. The entire upwards of the entire West Coast is already legalized. We're not trying to keep anybody out of the business that isn't already in it. I think that the other part of it, in terms of restrictions, though, which are different, have to do with kind of like the way that they did licensing, and actually each one of the states that we're all talking from did it a little bit differently. We had really high restrictions on the amount of licenses that would go out. And I think that in Oregon, they kind of let the free market decide how many licenses, isn't that right? For at least a while. Like I think you have just as many licenses for retail as we do, but we have twice the population. So it's not necessarily, it's been rolling it out and seeing how each state's done it and watching, because I used to think we were the worst. And now it's like, I see, oh no, there's some stuff we did right, but it's still, it's a work in progress. When you see, how did California do it in terms of licensing, the number of licenses?
There isn't a statewide number of licenses. It's basically uncapped. And the problem is that cities in California are free to make their own restrictions, and most cities at this point don't allow it at all. And that's why you see, I think there's 1,200 or so dispensaries right now. And I just actually had a post on this today or yesterday. So there's like 1,200 or so dispensaries, and actually it was last week. Most of them are concentrated in highly populated areas. So there's large parts of the state where we don't have anything. There's been efforts to try to change that, but unfortunately our law was passed by voter initiative, so that's not really going to be very fruitful without another voter initiative. And there's not really a good fix. Slowly but surely, a lot of cities start to come online, like drag their feet, because they think there's tax money there, but it's just another way that these businesses in these cities get highly taxed. So California, I think, is pretty bad job, in my opinion. New York seems to be taking the cake on doing a bad job, but California was
really, with the bodegos and all the. Well, that's the other part too for investment. Like when you think about investment, and you say, well, who were the winners to start with? And it was like, oh, it was retail all day long. If you're going to invest in this, then definitely go with retail. It's the lowest startup cost, and they make the most money and have the most power. And then you see what happened in California and New York, the most densely populated and arguably the highest markets. And it looks like retail might be the worst decision to invest in terms of like what you would want to do because of what's going on with black market and illicit sales. So I don't know. It's sometimes it truly is a state to state kind of analysis for what a good investment might be and what wouldn't.
I still think, in my experience, retail tends to be the most highly valued asset in the industry, just because
I agree.
it is where all the money comes in. I mean, certainly, like a delivery only type of retail business would maybe not be the best, but when you see M&A transactions, by far the retail is highly valued, because anybody in California can get, and I know I'm going to piss people off by saying this, but like anybody can get a distribution license, right? They're essentially a dime a dozen. Some places don't even cap them, but retail, you might have a city that says we'll issue 2 in the entire city, and it's like immensely competitive, right? And these businesses end up having like a local monopoly, provided that all the neighboring cities don't also have the same, a couple dispensaries. So I think it's still, I mean, despite all the problems we have here, and there are many, which I constantly write about, and that never change, retail still tends to be, I think, the highest value in terms of investment.
I think so too. And I mean, retail is the one class where you got to say, obviously it's the most location dependent, right? Griffin just mentioned like some retailers are just awesome because they have some sort of exclusivity through like local zoning or local regulations, and others is just because they are where they are, right? They're in high traffic corridors and things like that with producers and wholesalers and processors and distributors. Other class license doesn't matter so much. I mean, it's not good if they're like hundreds of miles away and they're spending all their money on gas to get places and such like that. But retail it's really like highly location dependent, real estate based. Okay, so we got questions on more specific question. What interest rates have you seen for cannabis dispensary loans, Griffin? Is there some sort of prevailing rate in California or anything like that?
I mean, it's going to be, in my experience, higher than what you'd see for other type of commercial loans. Like I said, I've seen it as high as in the mid to high 30s in this state, but those are for like not term loan situations.
Sure.
And in term loans, I've seen it higher, definitely higher than 10, which is the max. But there's, of course, a bunch of exceptions to that, and it's called usury. There's a bunch of exceptions under state law to usury. So one pretty common exception is that loans that are arranged by a real estate broker and that are secured by real estate are exempt from the usury laws. So you might see 16, 18, 20% interest in some cases. But it's just going to depend. I mean, but at the end of the day, almost without a doubt, you're going to see rates that far exceed similarly situated commercial loans.
Yeah, same answer in my experience for what I've seen. I mean, we never see anything below, say, 9-10%. I feel like a lot of times we see things creeping up into 12 and 18. And I feel like the longer I've done this, and it might be just because the market's depressed, rates or terms of loans seem to be shorter nowadays. Repayment terms are pretty tight, and lenders are almost like underwriting to a specific circumstance or exit event rather than just like, here's an open type of loan, here's a loan for your business. It's more like, I'm going to lend you this money because you'll do this with it and you'll pay me back on that date. And they're kind of tighter windows and more specific, I guess I'd say. You got
Keep in mind too that on the loan situation and the interest rate question specifically, to some extent, interest rates, when you see it at the lower end, that's dictated by the IRS, right? And so there's something called the applicable federal rate, where if you have a 0% interest on your loan, the IRS is going to impute interest at a certain rate. And there's midterm, short-term, and long-term rates, and that changes every month. They publish it on their website. If you Google AFR, you can find today's rate, and there's a table that's published each month. AFR today is substantially higher than it was in 2020, which was like, it was closing in on 0 at the end of 2020. I mean, I've seen it for fractions of a percent, whereas today it's probably in the 5 to 7% range.
It's around 5.
Yeah, it's high. So that is also driven up interest, because what that means basically is that the lender, their spread, the amount that's the difference between what they're borrowing money for, their money, and the interest they're charging, there's just less room there. So in general, I think you're seeing interest rates that are higher in just commercial lending But in the cannabis space, they're much higher. And interest rates on cannabis loans I was seeing back in 2018, 19, that would be maybe 12%, 11%, or probably 16, 18% today. And so that means it's more expensive to borrow money. Even on, certainly, a longer term loan, but even on a short term loan. And you don't forget things like prepayment penalties. Those I think tend to be more aggressive nowadays too. All kinds of other stuff like that, late fees, you name it.
Anything to add before I take the next question, Aaron?
No. That's pretty much tracks with what I've seen.
Okay. Next question. Are you seeing banks exit the cannabis industry now that there have been more defaults and non-payments? Maybe I'll start by answering that one. For me, just anecdotally, I would say the answer is no. And to the extent there's data, you can look at FinCEN, which is a part of the Treasury Department, actually publishes statistics on a regular basis. I think it's quarterly, with respect to how many financial institutions are filing something that we call SARs, indicating that they're doing some business with cannabis businesses, whether it's willingly or they just noticed something and had to flag it because they're required to flag certain types of transactions. But that number seems to be coming up, long story short. So it seems like there are more and more banks in the space all the time, notwithstanding problems with federal law and the fact that we can never, ever get the Safe Banking Act passed. But I don't see banks saying, no, we're going to exit this industry because we're seeing a lot of defaults on our loans. And the primary reason for that is most of the banks that are banking in this industry aren't giving loans to cannabis businesses, right? They're just giving cannabis businesses basic merchant accounts. They're giving them checking accounts, and they're not really doing things that you'd see with bank lending and other small businesses, like writing equipment loans and other things. Now, there's some exceptions to that. I actually set up one of the first credit unions in Oregon to do equipment lending and other things, but that's kind of an outlying financial institution, for lack of a better word. And the underwriting criteria are pretty strict for that kind of stuff. And I think even the little credit unions that were making loans that people might default on have receded in number, right? And there's just not a lot of like prevalent institutional lending to cannabis businesses. It's more like, you can have a checking account here, and you can pay us a pretty good fee to do it, to boot, and we're going to monitor you pretty heavily. So I would say that like banks don't really care right now about the macro environment with cannabis businesses for purposes of lending, because they don't think about lending to them. Do you guys agree with that sort of sentiment?
Yeah.
Yeah, I would add, actually, banks are really traditional banks don't want to work with even companies that work with cannabis companies. So you're not going to see any of the traditional Wells Fargo, Bank of America type banks doing any banking business, loans, or just doing business or letting them have checking accounts or anything like that. You're going to be almost exclusively in credit unions. And some folks, if you answer the question, and by the way, the credit unions, like, requirements to get into the accounts are just as strenuous as if you were applying for the license itself. But if you answer one question wrong, and you're going to be a cash business for the foreseeable future, because there's only so many banks that can do this in each state. So it's kind of crazy.
Yeah, what we see, I think there's a lot of private lenders, and the closest we see, and it's not even banks, but there's institutional lenders within the space who do things like receivables financing or equipment leasing. That's another big one that I don't think we mentioned up top. Which I think of as it can be structured as a loan in some cases, but we're not. I don't know that I've ever worked on a cannabis loan per se where there was a big bank on the other side of the deal. You just don't see it, and so that might conceivably change if there's rescheduling. Probably not, as long as it's illegal federally. Which, to be clear, it would still be illegal after rescheduling to Schedule 3. I don't think the big banks will get into it, and I think maybe equipment finance is or whatever Vince had set up in Oregon is probably like the most risk you'll see a bank take on. Period.
Yeah, I think the closest thing you'll see to institutional lending, or that we have seen in the cannabis industry over the years, is some of these bigger private equity funds. And if you're like old school and can think all the way back to privateer holdings and stuff, they've always been around, and they're kind of like banks. I mean, they underwrite things like banks and they think like banks. And I guess if somebody were to replace the word banks in that question and with private equity, I'd say, yeah, we have seen a bit of a pullback there, right? I'm not seeing these big venture funds anymore coming from out east or wherever and looking to finance cannabis businesses and take a quick turn and make a good profit at a high interest rate. We saw a lot of that stuff, even, up, especially even during COVID times. Aaron mentioned how there was so much money flying around. That stuff's gone in my experience. I just haven't seen that on my deals in the last 2 years. Nice to see a lot of it. So I think there's an institutional pullback there. It's just not, federally chartered banks or credit unions that we're talking about.
Right.
Next question. Are things different with lending to hemp businesses? So we've been saying cannabis the whole time. We're talking about marijuana there, obviously, and what that term means under the Federal Controlled Substances Act. Hemp businesses are different. It's federally legal. Griffin, what do you think? Are things different with lending to hemp businesses, and are people lending to hemp businesses?
Sure. I mean, yes, they're certainly different. It's not federally illegal anymore, hemp. I guess you could go for hours on the cannabinoid issue and what is and isn't legal, and we'll save that for the blog. But I have seen bigger banks lend money to companies that do hemp as part of the business portfolio. I still haven't seen a big bank lend money to a straight up hemp business. Not to say it hasn't happened. I just haven't seen it. Now, is that happening? I mean, I don't know. Like a lot of hemp businesses right now are suffering. Hemp farming is difficult. In my experience, a lot of the CBD companies tend to be very small, or tend to be part of a bigger public company that's doing cannabis, marijuana type stuff too. I mean, so I imagine yes, but it's like by definition, I think we just see more money pouring in on the cannabis side, marijuana side of things, and that's sort of always how it's been. But I just in terms of things like bank access, yeah, it's certainly a lot easier today. Banks will still make these hemp companies jump through a million hoops to prove that they're not doing cannabis on the side or that they're not doing cannabis at all. So, Vince and I have set up bank portfolios and diligence processes, and they still are pretty aggressive with hemp companies. Not quite as much as with marijuana, but that hasn't changed a whole lot despite federal law.
Yeah, and it's not just banks that'll work with hemp businesses. It's the federal government, right? Like I helped hemp businesses get SBA loans back in the day. Like in 2019, 2020, it seemed like a lot of people were growing hemp and they were applying to SBA for loans, and that was fine. And the SBA came out with the statement that, we'll lend to this industry, right? They're just small businesses. They're federally legal small businesses. And, those businesses were eligible for PPP and sort of everything else that came through the federal government. So I think you have to draw sort of a clean line in your mind between hemp and marijuana businesses. The part where it gets murky, and Griffin's right, we should save it for the blog, is like, well, are all of these hemp products legal? And what kind of hemp business are you talking about? If you're just talking about a hemp grower, like a good old ODA license or state license ODA hemp grower, that's kind of easy, right? But if you're talking about somebody who's making like THCA gummies and like processing this stuff in areas where it might be called a gray area, or people argue about like whether or not this is federally legal, then it's a different analysis altogether, and it's a different lending analysis altogether. And last point on that is things will change, right? Things should change if we get a new farm bill later this year. It's delayed, and we should have it already, but we're hopefully going to get one this fall. And then the contours around borrowing and lending to hemp businesses and a lot of other things around hemp businesses should become clearer, hopefully. But at a high level, I think that's sort of the distinction between lending to marijuana and lending to hemp. You got anything to add on that one, Aaron?
I would not only that. Don't be surprised if you are a hemp business, or THCA is different. But even if you are a hemp business, a lot of banks still just say no. They can't be, and it's one of the hardest things for people to understand. Is like, well, I don't have a right. You don't have a right to a bank, and so if a bank says no, I don't want to do business with you, there's really no recourse there. It just kind of it sucks. For like one of the things you can do to benefit yourself is maybe consider what you want your brand to be versus what you want your company name to be, And maybe by making that distinction of not calling yourself the big, green flower hemp company is going to be a lot harder to get a bank account for than, I don't know, Northwest Mutual or something. I don't know, something that's just benign. So your brand does not have to be your company name. It's another distinction for another hour-long talk. But do know that you don't have a right to a bank, and there's really not much recourse for it if you get refused.
Yeah, I've had people ask me that. Can you help me sue the bank? I say, no, sorry. I don't want to waste your money, waste your time, waste your money. Yeah, you don't have a right to a bank account. Anybody, any other final thoughts, guys? I don't see any questions that are unanswered that have come in. Did we miss anything? Do you want to talk about anything else? Do you feel good about it? Do you think that things will really change in cannabis borrowing and investing with the Schedule 3 thing?
Yeah, I certainly think so. I mean, I think, like I said at the top, anytime you remove an impediment to doing business, it makes money flow much faster. And right now, the federal government has its foot in the door, right? So with 280E, 280E going away won't solve all the problems, right? You still have these states like my state, which has insanely stupid taxes and insanely crazy regulatory burdens. And we have an illegal market that's out of control that the state isn't really doing anything about. And there's also competition from the cannabinoid market, which, again, it's a whole other host of things. And so 280E is certainly probably the top 2 to 3 culprits. But, I think that going away will change quite a bit. And it might be the impetus for other changes at the federal level. I mean, I don't understand why the current government hasn't actually passed legislation to change this, except to say that Congress is completely inept and has like an 18% approval rating. So, it seems like the easiest win in the world on both sides of the aisle when 90% of people support medical cannabis and 70 support recreational. But nobody apparently in Congress gets the memo. So the more things ease up, the more investors go, okay, I feel calmer about this. Whereas for the last few years, it's like the stupid money part went away. The just throwing money at the industry went away. Diligence got strong. I've had clients walk from deals. I've told clients to walk from deals. I've had people walk from deals on the other side for my client where that just didn't happen 4 years ago. So I'm thinking that, the changes that are coming down the pipe might actually be good for the industry and might be more healthy, but obviously it's not a complete shift.
Yeah, and I don't want to be all doom and gloom. Even now, I mean, there is cannabis borrowing and lending going on, and even in depressed markets in states like Oregon, I still have clients that are making money. I do. I mean, a lot of them have failed over the years and gone away, but some of them have done well, whether it's like a retailer through some, combination of geographic exclusivity and running a business well, but they've got margins. And, if you're a lender kind of interested in putting some money into the space, you contact people like us. We have clients that are, I would say, good bets. So it's business by business, it's piece by piece, but I think it's, opportunities are there today. They're not like they were a few years ago, and opportunities will be even better tomorrow. And I think that's especially true given the fact that the macroeconomy seems to be doing all right. Like in the last 2 years, everybody said recession. And a lot of private capital has tightened up, not just in the cannabis industry, but just everywhere, right? Like people were being careful and they were sitting on cash and they were doing the kinds of things that you would expect people with money to do when they thought a big recession was coming. But it seems like we might be out of the weeds on that. I'm not an economist, but as far as I can tell, it just seems like we maybe have kind of gone by that without falling into the abyss. And there are a lot of constellation of factors, I think, that are good for the cannabis industry, including that one. Anybody else? Any final thoughts? Because we're at 59 minutes, and if not, that's fine. Yeah, you got anything, Aaron?
No, I've got nothing to add. I think this was great, and it's still a market with a lot of opportunities, and it's worth taking the time to learn the culture of the industry. I know guys that came from top CEOs of companies that have come in here and failed because of the way this is regulated and dealing with those regulations. And then I've seen guys that grow weed in their mom's basement that are making $1 million a month and still doing it and really successful. So it's not all bad. There's amazing stuff going on, but it is something about like kind of understanding what's going on in this culture, what's successful and what isn't, and just really looking at who's doing what.
Excellent. Well, thanks everybody who came. Thank you for all your questions. Aaron and Griffin, it's always great talking with you guys. We will post this webinar on our YouTube channel and on our blog. And if you're not already subscribed and reading our blog every single day, get there. It's the Canna Law blog. Thanks everybody for tuning in. We'll see you all soon.
Thanks, everyone.
Thank you.